And in Asia, stocks were mixed today amid increasing concerns over the state of global trade. Mainland China shares closed lower, with the Shanghai Composite slipping 0.3% to 2,890.08, and the Shenzhen Composite also shared 1.043% to 1,515.89. Over in Hong Kong, the Hang Seng Index declined 0.15% as of its final hour of trading. In Japan, the Nikkei 225 fell 0.92% on the day to 20,410.88 as index heavyweight finally saw its shares drop 3.30%. The Topix index also shared 0.88%. Over in South Korea, the Kospi added 1.28% to close at 2,067 points as shares of industry heavyweight Samsung Electronics and chipmaker SK Hynix gained 3.06 and 1.99% each. In Australia, the ASX 200 slipped 1.9% to finish at 6,320.50 as almost all the sectors declined. And in the U.S., stock index futures were sharply lower this morning as market participants monitor an intensifying trade dispute between the world's two largest economies. At around 5:05 a.m. Eastern Time, Dow futures slipped 132 points, indicating a negative open of more than 134 points. Futures on the S&P and Nasdaq were both seen slightly lower. And the market focus is largely attuned to global trade developments amid growing fears that Washington's latest tariff threats against Mexico could tip the global economy into a recession. On the data front, a final reading of Manufacturing Purchasing Managers Index data for May will be released at around 9:45 a.m. Eastern Time. The Institute for Supply Management Manufacturing Index for May, construction spending figures for April, and latest light vehicle sales data will all follow slightly later in the session. In corporate news, Box and Copper Software are both expected to release their latest quarterly results after market close. Back here on the African continent, Kenya plans to withdraw an old version of its 1,000 shilling banknote to tackle illicit financial flows and counterfeiting. President Uhuru Kenyatta promised to stamp out graft when he was first elected in 2013, but critics say he has been slow to pursue top officials and there have been few high-profile convictions since he took office. The Central Bank Governor Patrick Njoroge said while launching new banknotes of other denominations that older versions of smaller denominations will remain in circulation alongside the new ones, but after October 1, the older 1,000 shilling note will be invalid. The central bank's move comes as Kenyan lawmakers push for the implementation of amendments to banking laws that would relax the East African countries' rigorous requirements for recording transactions above $10,000. And Mozambique has reached a restructuring deal in principle with holders of its defaulted 2023 bonds and says the new arrangement will not offer creditors instruments linked to future gas revenues. The Finance Ministry said last year it will share future revenues from gas projects as part of the restructuring of the $726.5 million Eurobond. But the latest announcement says these value recovery instruments would not now be included. Instead, it will issue a $900 million bond maturing in September 2031, paying a 5% coupon rate until 2023. After that, coupon steps up to 9%. Creditor committee members have agreed to provide Mozambique with $1 billion cash flow relief through 2023, at which point the government's revenue is projected to increase significantly for the long term. Mozambique will also make a cash payment to eligible bondholders of up to $140 million and hopes to wrap up the restructuring by September 1. And the International Monetary Fund says Zimbabwe will not borrow externally and will cut reliance on the central bank to finance deficits in a bid to set a track record of fiscal discipline that could earn it future funding. The Southern African nation owes $8.8 billion to foreign lenders, $2.6 billion of that in arrears to the World Bank, the African Development Bank, and the European Investment Bank. it has not accessed financing from international institutions since defaulting on its debt in 1999. It is also suffering from a dollar crunch, rising inflation, and public anger over shortages, all issues that have piled pressure on President Emerson Mnangagwa, who has promised to revive the economy after the fall of Robert Mugabe. His government agreed to have its economic and political reforms monitored by the IMF from May 15 to March 15 next year to try to convince foreign donors to restructure and forgive its debts. Well, having talked about all the markets from across the globe, let's, of course, look at what's happening in Europe, where stocks traded lower in the morning as fears over the current state of global trade intensified, causing international markets to stumble. Let's get more from Daniel Coop, standing right on the floor of the Frankfurt Stock Exchange. Hello, Daniel. Good afternoon. Good to see you again.
Yeah, good afternoon to you, Chimi. Yeah, it's been a while. Great to see you again. Hope everything is fine over there with you and all our viewers in Nigeria.
Everything is perfectly okay. Thank you. Well, the trade war between the U.S. and China continues. Meanwhile, China has set out prerequisites for a U.S.-China trade deal in white paper. Now, one prerequisite is for the U.S. to remove all additional tariffs imposed on Chinese goods. How likely is that?
Well, Jimmy, I would say it is not very likely at all. I mean, when you talk to traders here on the trading floor, they used to be rather optimistic. Some weeks ago, it seemed that those talks between the United States and China were actually going in the right direction. But now, with the latest rhetoric of the U.S. president, with very strong words again towards China, threatening the country with possible new tariffs, and all of this happening while the two countries are still negotiating, investors have kind of lost their optimism. And we have to think about that also in the last week, U.S. President Donald Trump has also threatened Mexico with potential new tariffs as well. So it seems that this entire topic of being, America number one, of, tariffs, all of this is again, it seems to be at least a top priority of the United States, and it seems that this is not helpful, of course, during the process of negotiations. So traders here at the Frankfurt Stock Exchange, they don't really believe that this topic will be very soon off the table.
Well, Daniel, we really don't have much time to look at some of these developments, but a route to central banks' interest rates decisions and speeches as we start the new month, from Reserve Bank of Australia to BOE and, of course, India. What is the general outlook on rates direction and what they mean for the markets currently on edge?
Yeah, very interesting. You mentioned two countries. You mentioned Australia and you also mentioned India. And it seems in both Australia and India, there could be a change of the monetary policy happening very soon. We are getting word that most likely the Reserve Bank of Australia is widely tipped to deliver an interest rate cut tomorrow. This would be the first since August 2016, and that they are most likely going to bring it to a level of a record low in Australia of 1.25%. We are also expecting the same thing to happen also in India. Also there, the RBI is set to cut interest rates. And also this week, Mario Draghi, the head here of the European Central Bank, will deliver a speech as well. Of course, the picture here in Europe totally different. We have to remember interest rates here are already for quite some time at this record low of 0%, and we don't believe that this is going to change. One factor, of course, is also that the economy in Europe is not growing as fast as the European Central Bank wants it to grow, and also more trouble most likely to happen with Italy, because the European Union has been criticizing Italy once again for their budget policy. So with all of this, we don't expect at all to see a change of the monetary policy happening here in Europe.
Oh, well, Daniel, I guess it's a week packed of a lot of interesting news there. We'll keep following those trends. Thank you for your time. We'll take a break now.